We start with the S&P 500, the SPY, and we'll get into the Nasdaq here in a second. We look at this behavior, and I'm going to tell you right now, you're getting what you expect, okay? We have to say that. We have some fundamentals we're going to talk about. We have some fundamentals, don't get me wrong, but you're getting what you expect. We look at the 4-hour chart here, you know what? And we'll go into like a little bit of, higher time frames as well, but this is our level we had marked right here, the 40-20, as you can see, and we'll get a little bit more of a zoom in here to around the 2-hour. Then we get into a reaction of that said level, obviously rejecting sell heavy from yesterday and in this morning, and we push down. Okay. Now, does that mean this run is over? Does that mean this run is just beginning? Now, we have a lot of levels we talked about it as well yesterday. On the channel, if you do remember, we love going over the S&P. We love going over futures specifically because they point us in the direction. Futures are like our North Star. They guide us to either go short, go long, to do anything. And we look here, what was the level we talked about yesterday? 42.09. Go watch the video on repeat. It was the swing high that you previously had from when? When was that level established? Right back here in February 1st to be exact, right? So we zoom back in, as you can see, guess what happens on the day? You open up, you push down, 1, 2, and we're still rejecting in this range. So we have a lot to discuss here because I believe the writing is on the wall for the movement that will come. And I believe if you're patient here, there's a lot of opportunity. Now, before we get into that, I'm gonna ask you to do two things. Consider liking and subscribing. Also, too, the newsletter is down below. This is the link, and this is from this past week's newsletter, so you can see. Now, obviously, we have futures. We have everything listed in here, but I just want to highlight something real quick. This is Google. This was given to you beginning of the week. We told you what to expect. We told you where we were going to, where you had to break above. Key levels, 123.28. Giving you a quick visual. Going into Google. Are we making this up? Are we forging this? I'm going to tell you right now, we're not, right? Right now, where are you holding below? Right below 123.28. That's where you're holding below. That's where buyers cannot hold you above. Going back into that as well, giving you more of an instance of what to see happening, right? Looking for potential growth towards these levels, right? Going a little bit deeper, going into, Apple made it on the list as well. We had those highs there. We had about what was happening, what to expect, right? Where are we looking? As you were operating in this bull flag of sorts and consolidation. Apple coming in here as well. You top out around 176.5, a little bit less, but you're still kind of flagging there. All this was on the list for you. You even had what was happening on the Nasdaq as well, and Dow and ES and everything in between. You knew exactly where to expect and exactly what we were targeting, right? That 42.12, 42.09 range, also right there, so you were prepared, right? That's the newsletter, absolutely free. Also, if you're interested in Discord, I'm not going to push this whatsoever. If you want to get involved with traders, become 1% better every day, right? You want to get around people that day trade for a living. Over 900 of us in there now. We're pushing our way towards 1,000 members as we speak. This is the link. Check it out. There's no pressure whatsoever. There's a lot of free content here as well. So focus on the free before you take the next step, though, in my opinion. Now, let's get back into the video. I'm going to cover fundamentals real quick. Now, we look here, and this is ultimately what painted a picture. There's two things that happened today. We had the debt ceiling, and I continue to say the same thing. The debt ceiling number 2, Fed paused their tone there, number 1. Okay, so number 1, number 2. Now, regarding the debt ceiling, we'll talk about this here in a second. It's going to be more drawn out. Fed Powell talked today, and if you want to know what he said, it was bullish. I'm sorry, it was as good as it could get in the short term. The Fed was expecting further tightening until recently. They were expecting to continue to go on rates. Now they're expecting to stop, to pause. It's not my words. Don't attack me. I'm just telling you what they're expecting, right? This is also aligning with what we kind of assumed in the data that we previously had. Okay, so we're on the right track here. Right? That's important. We're on the right track for success in this market and predicting ultimately the direction that we are taking. Now, where things got a little bit out of line were with the debt ceiling talks. Now, it's like we hear a different story every day. You have one day, we're making steps. White House is opening up. They want to do this. Today, Republicans, they just walk out of the White House. Say, look, they're not being reasonable. They're not going to meet us in the middle. We're done. Paused. Now, it's also worth mentioning Biden said he is coming back into America today to finish his negotiations before Sunday. Now, again, got to play it by ear. We'll have an update video coming up, Monday, maybe Sunday. But be on the lookout, okay? This is not ideal. I'm going to tell you right now, if there's one event, and before we get into the technicals, if there's one event that can cause this market to get a lot of people are commenting, we expect bear side, bear. It's like every channel on YouTube is pushing this bear narrative. If anything is going to cause that bear narrative, I'm going to tell you right now, it's the debt ceiling not getting resolved and defaulting. Now, there's also one giant elephant in the room. Now, I don't want to jump into this. I don't want to play the video. I just don't want to do all that right now. But Biden can force this debt ceiling to get resolved by using the 14th Amendment. I'm sorry. Basically saying, translation, thou shalt not care about inflation. Thou shalt not care about debt. We decide, right? Now, I'm going to tell you right now, if the Democrats go this route, I think it's a dangerous route. What is the underlying opinion here on the channel? Do we care about Republicans? We don't. Do we care about Democrats, lefties, righties? We don't care. We care about making money. I think this is the underlying issue with most people when it comes to trading. You care too much about your emotions and you do not disconnect from what you assume, what you think, what you want to believe in order to make money. You keep those feelings deep down inside and you let those affect your mental aspect. And I think right now, if the Democrats decide to do this, this sets up a dirty election to come. I think the election that's coming in 2024 is going to be dirty, but I think this right here gives more ammo to the Republicans. Okay? And I think this, you want to keep it as clean as possible. I think if you're the Democrats, because you got this guy over with Trump. And again, I'm not picking a side. I'm just telling you who we know is going to play a certain way, which his followers love. And then we have this guy over here, Biden, who really, we look at his presidency right now and hasn't done much. Fact of the matter. We can call it like we see it. And that's why he needs this debt ceiling to pass so he can do something. Right? He needs money to spend, which will hurt the economy. And Kevin McCarthy said, look, we cannot spend more than we did last year. It's just not going to happen. Right? That's what he said. So when we look here, when we attack the situation, I believe if the Democrats go this route, we're painting a dangerous game moving forward. And I think that it does not benefit their cause in order to run for president, or for the Democrats to win the next election. My opinion, I think this is all political theater. I think this is disgusting what's happening on both sides. I think it just needs to get resolved personally, but it just isn't. So again, political theater, it is what it is. Yeah. So again, this is the black swan event that could possibly play out, but it has not. So I'm not going to predict something to play out if we don't know. So I want to let that be known, let that be clear. Now, let's jump into indexes and where they're at. Let's talk about this. Now, we had some supply levels drawn. We had some things drawn out here. What did we say yesterday? As you get into 13.95 into basically like 14.2, it's a big level. Again, if you don't believe me, go watch yesterday's video. I'm not making these levels up. These were drawn yesterday. And we hit this level in 13.95. We get rejected so far. Now, what I will say here is that you're still not even retesting August highs from right here. So when we zoom in a little bit, you can still see we have quite a bit of ways to go, almost 100 points. So Qs, Nasdaq, I'm going to tell you right now, they look inherently strong. Again, I'm going to tell you the same thing I've been saying. If I'm looking to go short, if I'm looking to bet on downside, if I'm looking to try to attack the market towards the downside and make money off the downside, I'm not looking at tech. And I know this is going to make some people upset. They're like, Tyler, semiconductors are too high. Tech, it's too high. It's this, it's that. Look, I don't let emotions, cat got my tongue. I don't let emotions cloud my judgment. You guys know that. It's all about making money here. You got to be quick to get in, quick to get out, right? So again, until we can break back below 1375 on Nasdaq, I don't necessarily think you can play the downside on tech. Now, SPY and ES, a little bit of a different story. You're pinching in this range of, I mean, really, you're below 4,200 here too, also where you're closing on the day, but you also rejected multiple times to 4,209. So I'm going to tell you right now, I don't think ES looks that good. ES definitely responded poorly to the debt ceiling news when they started to pause or said the pause was here. It's not good. But what I'm going to say right now is no one's stepping up to the plate to go short based on what Powell has said. Powell saying most he's insinuated everything but saying we're pausing. He's basically given every hint to that's going to happen. No one wants to go short until at least they know something with the debt ceiling, because the debt ceiling again will continue to propel you, right? You give the economy more money to spend, you give the executive branch more money to throw out there, only good things can happen in the rationale of the short term of the market. Okay, so we know that. That's our viewpoint there. ES, more hit or miss. But again, I'm going to tell you right now, shorts just aren't stacking in. Now, pointing to the view of Bookmap, the link for Bookmap is down below, so check them out if you want to. This is the heat map of the market today. Now, you came out at open, and I was pretty clear in Discord about this. You came out today on ES. You rejected almost 3 times of around 42.25. Okay. Big seller stacked up here. It was around 1,500 lots around this level that were just holding you down. And they started getting aggressive after. Okay. But we didn't see really crazy volume come into the market today. And we didn't really see follow through in either direction. I'm going to tell you that also. So we ended up holding there around 4,200. We closed just below it. Okay. Now we saw some of these icebergs to the downside start to step in. But ultimately, I'm going to tell you, you cannot hold the market down, and there just wasn't the follow through. You get a nice base of this level of 4,190, 4,200 flat, and you look decent, right? And at the end of the day, in the after hours, you start pushing back down. Okay. You had some decent buys coming in at lows, but again, you couldn't break up to the upside either. So again, lack of follow through on both sides, a little bit of disconnection, and I believe we're just kind of being patient, got to be waiting. All in all, though, you're looking like you're somewhat back in the range on SPY and ES. I think ES has not confirmed your breakout. You couldn't hold above 4209, 4210. So that leads me to believe more downside risk is there. So if I'm looking to go short, SPY, Dow, those are the names I'm going short on. I would go specifically short on the index. That's my play there. If I'm going long, it's tech, semiconductors, cloud names. The game hasn't changed, okay? People are going to say, well, Tyler, you're short, you're going long on the top. Look, I'm saying if you're looking at sectors to play, it's the reality of the situation, okay? If you go short, you want to go short on what? We go short on the weak names. We don't go short on the strong names. That doesn't make any sense. Okay, so that's where we're at there. Now, going further, a little bit of SPY action. What's happening here? Again, SPY, not the most beautiful thing here, right? Kind of just trading a little chop sideways, trying to hold above 418. After hours are pushed down a little bit, like 417.9. Nothing crazy. No real decision there. Okay, want that to be known. Now, before I let you out of here, we're going to go over a few more things and a few stocks I'm liking. But before we do that, go over VIX real quick. Again, everyone's saying VIX is spiking. It's doing this, it's doing that. Again, guys, where's VIX at? You know, same story here, boys and girls. You were at your levels of 2021 when the S&P was pushing to new highs every single day. And when VIX is down below 17 in the 16 range, you are incredible, right? You're a major bull there. Okay, so VIX still looks decent. The DXY, we saw some volatility today. Once we saw the debt news, the debt ceiling possibly not getting passed, we saw the DXY take a hit immediately. A lot of volatility there, not really necessarily good for the market. Bonds continuing on their, ascent to local highs. Again, bonds rise, right? Okay. Now, and also your 10 and 30-year yield is spiking as well back to 94% almost. Now, again, with yields, what does that mean? Yields are the number one thing I'm watching in order to get a view and a grasp of the feel of the market from large investors. That's my understanding there. So again, today's video, a little bit more mixed, okay? Tech, I still love it. Tech, still strong. clear mount. Qs, you're incredible. You look great. Nasdaq, incredible. Fantastic. Holding previous highs. Incredible. SPY, ES, Dow, not as good. Not as interesting. A lot more cause for concern. Okay, so keep it there. Understand that. Favorite stocks, let's go over them very quick, short to the point. Number one, again, huge QCOM fan down here. Stock is, I think, the way to go, though. I think buying stock is just 100% the way down here. I love them. You're back down at almost 2017 lows. You're 2020. Sorry, 2020. So be on the lookout here. I love where you're at. Big fan here. QCOM, big name to be watching. Going in Meta. So Meta is a really interesting name, and Meta is near highs. So again, you got to be careful. And I originally was short on the day on Meta. I got stopped out of it. But I'm going to tell you a few things. So Meta here on the 2 hour, kind of getting a little bit of a bull flag forming out here. But more interesting than that, they announced that their new Twitter competitor will be coming out this summer. And I'm going to tell you right now, people hate on Meta. But Facebook, Meta, has the most reach of any company on this earth. They have the most reach. Okay, they impact the most people. A new leg, a new branch, a new tentacle of this octopus of a company that attacks so many sectors can only be taken as good news. So Meta, it's got to go on your watch list. Okay, I already know people are gonna be so upset when they watch this. But if you look, just so you know, are trying to break out over that 248 range. You got a big old gap there too, about $30, $40 of upside. Be careful, head on a swivel. Opportunity is there. Very similar if y'all remember months ago with Netflix. We loved Netflix back here. No one believed us when we broke 250. Everyone said we were going to just dump. But Netflix, different story now. Everyone likes it. Their ad revenue, they pivoted as a company. Meta's pivoting. Meta's doing things it needs to do to stay profitable. That's what you like to see during this market. So Meta, top name on the list. Okay? Top name on the list. Going into anything else, I don't feel super comfortable. I'm not going to lie. There's some day trading opportunities. I'll have some more coming out. But for now, that's the creme de la creme for me. It's my opinion. That's my list. These are the names I'm watching. If you have questions, comment down below. I'd love to answer them. I'll see you tomorrow or Monday. I don't really know yet.